Hey traders, welcome to Charts and Coffee. Great to see you all. Happy Thursday, happy CPI Thursday morning. I'm going to take y'all through a quick walk through the setups that we've already taken in the Sector Secrets Mastery this morning. So just a little background. We got together at 8:15 a.m. Eastern to set up the CPI release using the historical price movement ranges. And these are volatility zones that we have on the charts. You can see the green and red zones there. And we use these to measure how much a high volatility, high impact hot zone, a data release, could move the indices specifically. So I'm going to walk you through that really quick because I get a lot of questions about pre-market trading. By the way, of course, if you have any questions on symbols or setups, let me know. Type them on in, and we'll just take a few minutes to show you what we've done already before the bell. So I take notes, a lot of notes. I put them in something called Workflowy. And as we're trading in the mastery, I'm sharing the levels, I'm sharing the stops, I'm sharing the watch list process. So there's a lot there that back in the day, I know a lot of you probably keep a journal or notes. Back in the day, this would have been pen and paper. Now it's on Workflowy, and all the members can benefit from whatever it is that's bubbling up in my frontal lobe and ends up on that Workflowy. Well, today, our trade was to set up the S&P. We wanted to keep it simple. The S&P short. We wanted to do a long or a short, but we had a slightly overbought stochastic, so it made sense to focus on the short side, but we do set up the long and the short, right? So that's the first thing that we do. And so that meant that on the wick of the 8:30 hot zone, where we shot up, you can see here at 45.25. What did that do? That actually triggered the short. I'm just grabbing my drawing tools here. Let me move these. It triggered the limit order. Notice I had a limit order here. We don't use market orders. There's no way you can trade this with a market order. This isn't gaming and clicking on the mouse as quick as you can. That is not what we do. We place those limit orders, and those both were triggered as we went higher on the CPI release. So right in here, you can see 45.19, and then again up here, 45.25. There's no way I get this without that price conditional limit order. All right. So as the market moved lower, the first place that we exited was 45.16. We paid ourselves. And then our last exit was 45.09. And yeah, the market went a little bit lower. It was actually 45.09 and a quarter. And yes, the market went a little bit lower. I kept things pretty basic today. I managed a little bit more aggressively than I normally would. We had a lot of new traders following along, trading micros, trading minis, but this is the way we do it. And what I want to definitely emphasize is all the levels to enter were determined in this case, probably 5 minutes before CPI. We had these levels already determined, limit orders already out there. We even had our first target already determined. And we made a couple on-the-fly adjustments to manage risk as we saw price action yielding, certain places that we were stalling. Here's the way it looked in the 1 minute, and so forth. So for those of you that are wondering, how does that work? All right, so my moderate entry was 45.25. We exited at 45.16. That's 9 points at $50 a point. Okay, so that's $450 per contract. So the second exit from 45.25 was at 45.09 and a quarter. So that's, oops, I did the math wrong. 4525, right, minus 4509.25. So that's a total of 15 3/4 points, right, at $50 a point. And that's an additional $787 per contract. So that's the kind of thing we like to do with these 8:30 hot zones. That gives you an idea of what it is we're taking advantage of and the tools that we use to do it. All right, so we're already starting off with a little bit of a cushion, which is great as we go into the morning. Pretty interesting overall movement from the S&P. And that is, not only do we sell off on that CPI initially, which is where the trade and the profit ultimately came from, but take a look at what's going on right now. I think the thing that I just want to get across right now, gang, is CPI is a hugely important number, right? Because inflation is what maps to what the Federal Reserve is ultimately going to say and do. We are still skewed to the upside, gang. I know we've pulled back, but for the most part, we are still very much skewed to the upside as long as we do believe the Fed is going to pause this year, and as long as we're going to see cuts sometime between, say, March and May of next year. Now, anything that could be a black swan event, I get asked this a lot. Rog, you're bullish, but what if? What if? How do you trade for that? You're going to get short and sit there? What's the trade? So be careful of traders saying, oh, we could have a black swan event. That's nonsense. Not that it couldn't happen, but that it's ridiculous to think you're going to hedge everything you're going to do in the anticipation of something that we could not possibly foresee. Gang, that is not trading, right? Please be aware of that. You're going to get a lot of that right now. I'm hearing it constantly. So remember, gang, it's not about picking targets. Trading is about the path to the target. So keep that in mind. Stand guard at the gate of your mind. There's a lot of nonsense out there in financial land about what's going to happen next in equities. And by the way, nobody knows what's going to happen next, except for Jerome Powell, and he ain't talking. So until Powell wants to give us his S&P target, we got to sort this out for ourselves. All right. Good morning. Good morning. Penelope says, good morning. I love being a part of the mastery. Thank you. Thank you. Great to have you. We've got a lot of folks that have joined the master. I know a lot of you listening, so you get a peek on the inside of what we're doing, and like this trade we did this morning. So that's awesome. That's awesome. I love it. I love it. I appreciate it. Okay, so Sue asked, so if the CPI was a good number, why was there a sell-off after the immediate surge? Does this volatility always happen? So Sue, you were in the room, right, with us. So remember this. Did we ever talk? Now think about this, and I know this is going to seem a little counterintuitive to what most analysis does tend to do. I don't even know what the number was. I don't even know what it was. Didn't even care, right? All we want to know is that there's a high impact, high volatility event coming out at a certain time. That's what I call a hot zone, right? And that's why I coined that term. It's just a zone of high impact. Yes? Okay. I don't know what the number was. I'll take a look at it in a little bit. I don't know if it was good or bad. All I'm looking to do is take advantage of the reaction. Now, later on, it's going to behoove me to go take a look at it as we go into the morning bell. But for our trade, for that really nice winner, 45.25 to 45.09 from top to bottom, 45.16 to 45.09 from top to bottom, right? For that trade, all I needed was the volatility. After we get the bell, we'll go take a look at CPI and see what it does, if it means anything. We'll go take a look at the target rate probabilities that are the best measuring stick for it. But I'll look at that after the bell. Yeah, and for the trade itself, we just need the volatility. All right, Rainy Days asks, how much is it? How much is Euro US inversely correlated? I don't think at all. No, I don't look at dollar correlation to the NAS S&P. No, it's a few steps separated. Remember, Euro US is going to be your best, obviously your best look at the euro, but it's also your best look at the dollar because the dollar is a basket. The dollar index is a basket, whether you're looking at DXY, UUP, DX futures, and 58% of that basket is euro. So your best view of the US dollar is Euro US dollar. Then think about what impacts Euro US dollar. It's the same stuff that impacts treasuries and gold. So what it is that happens is monetary policy is reflected on currencies, on treasuries, on gold. And then that monetary policy filters into S&P, NASDAQ, Dow, because let's face it, stonks love cheap money, and they don't like a tightening Fed or a hawkish Fed. So I don't think there's a direct correlation at all. I do have the data somewhere. I don't have it handy, Rainy Days, but there is a correlation. It's not as high, and it does fluctuate. But monetary policy is that connective thread. All right. Thanks for the question. Real asks, thoughts on BABA? Sure. Today, does the cash session usually mimic futures price action. For maybe the first few minutes, we can see an echo from the 8:30 action to 9:30 because remember, stock traders, ETF traders, options traders in both those asset classes could not express an opinion. BABA has a minor low real that triggered as prices rallied up 94.5. You can see the signal right there. The signal is not the trigger, it's the setup. It's a signal for a setup. I don't want triggers that tell me buy now, sell now. I want to know a step ahead. I want to know a beat before, right? That way I can set up position sizing, risk, the trade. So I don't want to be running into the market when the signal says get in now. So we have setup signals, not get in blindly or whatever signals. And that signal fired off on 8-8, okay, real. And then on 8-9 yesterday, on Wednesday, we actually completed the patterns entry trigger. As far as FXI, same thing. Yeah, absolutely. Robert says, really enjoying the mastery so far, learning all the things. I love that. I love that, Robert. There is no reason to compartmentalize. One of the things that a lot of traders ask me, Rog, how have you been trading for so long? Because I don't limit myself I'm just a day trader, or I'm just a swing trader, or I focus on just the S&P. I hear a lot of advice about, hey, specialize in one thing. I actually don't believe that's good advice. Specialize in the thing that's working when you're learning how to trade. If I was learning how to trade in 1998, I started trading 10 years before that actually, but if I was learning how to trade in 1998, I would have focused on day trading tech stocks. That was what was happening, right? If I was learning to trade in 2016, I would have learned crypto. I would have gone to where the action was at, right? That's where I would have started. Yeah. If I was learning how to trade in 2000, I would have gone into Forex. And that's so to me, the first thing you do is ask yourself, where are things moving? Let me start there, right? And then as you learn how one market moves, you're going to realize we're not trading crypto or futures or oil or gas or whatever, or Cisco or Apple. We're trading the psychology about those things. And then everything starts to gel and you realize, if I understand how to measure people's emotions with the tools that I use, I can trade all the things, right, Robert? So that's what we specialize on, all the things in multiple time frames. But we make sure that we break up our day, right? Much like middle school. History was at 2 and math was at 3, right? It's the same thing. If we can compartmentalize, we can do it all. And I do believe that's the best way to go. All right. Let's see. Question Eva asked, what made me decide to short on my morning trade? The hourly price movement range. Yes, the hourly price movement range. Rainy Days asked, where did I go to learn? Trading. Was there a formal education? Oh gosh, Rainy Days, things like simpler trading did not exist in 1987, 1988, when I was really realizing I want to learn how to master this thing called the market. There wasn't the internet. I spent a lot of time drawing out my own charts, etc. So I won't go back down memory lane there, but the best way to learn how to trade is the best way you learn how to do almost anything. You have to do the thing. We can read about the basics. We can talk about the mechanics, but at the end of the day, I remember the first time I went to motorcycle racing school, I was riding a motorcycle for a while. I knew how to get up and down the gears. I knew how to take a turn. But you know how I learned how to drag race a motorcycle that goes from 0 to 100 miles an hour in less than 2 seconds? It was a pro stock motorcycle by getting on the bike. That's it, right? So a lot of it is, we can learn some basics, but then the market is the most amazing teacher, all right? The market is the most amazing teacher. And then, the next part is, and this is the most important part, I needed someone who got on the bike before me to teach me. So it wasn't like I didn't have a mentor. I had a 2-time NHRA champion teaching me how to do it. So it wasn't like practice alone did it. It was, for those of you that are NHRA fans, we had Angèle Savoie, who had won the championship twice, and said, This is what it's going to feel like at launch. And this is where I screwed up when I was a new trader. But getting on the bike with a mentor, right? I didn't have a lot of mentors when I started, but now that I've got to learn a lot of different things over the years, because trading gives you a lot of freedom to do these things, I realize getting on the bike, getting in the market, but having a champion go, okay, this is what it's going to feel like when you hit the button and you go from first to second. And this is how the bike's going to pull. Does that make sense, gang? So yes, you get in there, but you get in there with someone who's done it before. And that's what I've got, the privilege to do with a lot of traders. A lot of folks are getting on that pro stock motorcycle bike for the first time. And I can sit there with them and say, all right, this is what it's going to feel like. This is what 3 G's at launch feels like. And it's going to pull at about 1/8 of a mile. And you got to keep an eye on the trees at the end of the track so you don't run into the wall, right? That's all the stuff that a mentor can do. And so that's what we do in the room. We get on the bike, but I'm there with you. And I hope that makes sense. That makes a huge difference. All right. So next up is any tips on determining daily sentiment on futures? So Hasib, yes, absolutely. And we've codified it. Yeah. So this is how we do it. If you're looking at daily sentiment today, let's start at the smallest piece of the S&P that I'll look at, which is the 5-minute time frame. So far, it's neutral. I've got a multi-trend that's color-coded like a traffic light, and it's neutral. Okay, what's the next thing I can look at? I'm gonna jump from the 5-minute chart there on the left side of your screen to the daily chart here on the right. Okay, and you might think daily, yeah. What's really interesting now, are we above the previous session close, Hasib? One of the easiest ways to understand sort of this sentiment is think about all the folks who are measuring their gains or losses. Where are they measuring it from? The previous session cash close. That's why I call it the line in the sand, right? That's that psychological sentiment, line in the sand. That's why that works. So if we're above the previous session close, there's a bullishness there. If the 5-minute can organize into an uptrend, there's a bullishness there. If we can get above the pre-market highs, there's a bullishness there. So there's a couple of things that we can look at pretty mechanically. Like those things that I just listed, see, look at those every morning. Really, really easy, right? And those are going to be incrementally things that you can say, all right, this is happening above the line in the sand, bullish or neutral or bearish structure intraday, and they're very objective, right? There's not a lot of fancy calculations needed to know whether we're above or below yesterday's 4 p.m. Eastern close, right? Things like that. So I hope that makes sense. A follow-up question on the red and H, they're very close to each other. After the fact, Eva, after the fact, which is expected. This is why when we take our reads for the setup on the hourly price movement range, we must do it. This is what we did together. And by the way, gang, all of our sessions in the mastery are recorded, right? So you can hear me walk you through, type the notes, candle by candle, moment by moment. You can watch that archive and go, oh, this is what Raghee was thinking at 8:20. And at 8:25, this is what we were doing, putting in limit orders. And at 8:30, I even typed in the notes. Now we're just waiting. But I favored the short side because of a read on an indicator. Then we got our fill. Then we started going about managing risk and managing reward. So those replays are really helpful. But yes, hourly price movement ranges after the volatility hits are not as effective as making sure you know where the volatility is before. And that's where the calmness for the setup is. I know where price has to go, and I wait for it to come to me. And you notice that's all we did. We waited for price to come to us. Do we chase it higher? No. Do we chase it lower? No. Do we use market orders? Negative, Ghost Rider. We put in the limit orders. We waited for the market to come to us. That's what the best traders are able to do, because we're like big league, major league baseball players. I'm going to stand at the plate and I'm going to wait for that pitcher to put a pitch in my zone. And then once it hits my zone, off it goes, right? Okay, gang, that's a wrap. As always, I will see you all tomorrow, same time, same station. All right, it's a date, and I will talk with you all soon. Be good to each other, gang.